let's find out the long-term market outlook as well from Balasubramanian, who's now joining in, MD of Aditya Birla Sun Life Asset Management. Thanks so much for taking time out, Bala. Good to have you on board. And just what we've been discussing, that the heavyweights, the likes of HDFC Bank, Reliance Industries, have been non-participants, if you will, up until now. What exactly do you believe this indicates for the overall market?
First and foremost, I see the breadth and width in the market have been widening, going beyond the Nifty companies, which you have seen for the last 1.5 to 2 years. Is coming from the fact that as a country, I think we have been seeing a wider level of participations into the overall economic growth. Is coming from one, a huge amount of infrastructure spending that is happening, and second is the good amount of Make in India theme is also now creating new industries in the country. Therefore, we have been seeing an automobile industry as a sector also now beginning to do well, especially in the other than OEMs. That's why if you look at it on a broader basis from the market perspectives, the sector that has done exceedingly well, who remains the core component of the market of the country, I think they are going through a consolidation given the fact the name that you took has gone through a consolidation phase, and basis which I think they need to settle down before actually start seeing the future level of growth. And this is always a function of market. We have always seen historically that we'll always see sector which have given significant outperformance go through a consolidation and does underperform, and then actually again catch up. This is a catch-up game. It always happens. I would assume it's part and parcel of that game rather than having any negative view on any of these stocks or sectors.
Bala, we had Sanjeev Bhasin of IFL, and he was talking about that one good stock to buy for next 1 year. Can you guess the name? Which one did he speak about?
I didn't see him.
Okay.
I didn't watch him.
Aditya Birla AMC. He's of the view that the worst is behind AMCs and now the market share gains and the commission structure will stabilize. Do you think that holds true for all AMC stocks also? Because today also we looked at Economic Times report where Tatas are looking at bidding for UTI.
Although I will not be able to make comment, especially to our stocks or in general from the equity market point of view. But I can only talk about the AMC industry in general continues to remain a core industry, given the fact that financial saving in the country has been rising and more investors would prefer to invest their savings to the mutual funds as we move forward. And the more players coming in, the expansion will happen. Existing players like us who have an established track record, having through multiple cycles and having been a lead player in terms of thought leader as well as have a seriousness in terms of building both the business and as well as the customer base. Therefore, the large players will continue to have the little bit of strong footing from the point of view of building the business. The business will remain quite robust. And then, see, margin, of course, is a function of regulatory framework and changes. I think the way things are changing as it stands today, though it's difficult to make a comment in terms of what the roadmap as far as these expenses concerns. I think very fact that we've been going up and downs is also there is an element of realization that industry is of course already working on thin margin. Therefore, how much one can bring. At the same time, alternates also have been emerging in terms of various products that customer want to choose, they can choose. And given this kind of fact being there for mutual industry, I would assume the industry will remain one of the core sector, both from channelizing its savings into the capital market point of view. Second, even from providing a capital for the needs of various companies, both in the fixed income and equity will remain one of the major provider of capital. Given the fact that we play a very larger role, I would assume this will become one of the key sectors as we move forward from the overall economic perspective, country perspective.
Okay, fair enough. And what's your outlook then, Bala, when it comes to looking at the overall fund flow activity as well? Given the kind of sort of aberrations that we're seeing across the globe with respect to the bond yields as well, how are you looking at the liquidity situation into India?
As it stands today, liquidity is comfortable. Of course, we did see some the long holidays which was there towards the month end, and again is the half year closing. There was some bit of tightness. There was some bit of flurry of activities for raising deposits, but otherwise, liquidity in general has been quite comfortable. The bank committee has been quite clear about providing liquidity. From the flows point of view, I think people have increasingly got that feel that investing in equity market has to be largely through the SIPs, and that's something we are saying that SIPs continues to grow. And then net inflows industry has been pretty decent. And there was a flurry of activities in terms of even redemption, stopping of SIPs. We're already seeing it coming down in terms of the redemptions coming down and SIPs cancellation coming down, and the new registrations have been rising. I think this, in my view, will continue even as we move forward. I'm also have the opinion that given the fact that bond yields are also rising globally, especially the US bond yields have gone up and Indian bond yields are somewhere around 720. And we also see great opportunity on the fixed income space, given the fact that one general view that is coming from global market across all economies, across all fixed income investors, is the rate is going to remain higher for longer. If that is going to be the trend that we are going to witness for the next 1 or 2 years, even fixed income schemes, right from the liquid funds, given the fact that it will have a carry of close to about 7.2% linked to the moral repo rate, the carry being better in the fixed income schemes, we'll also see allocation towards the fixed income schemes also increasing along the side of the current allocation that happens in the hybrid as a funds category. So I see the flows doesn't get reduced, but I think you will see some bit of split between equity and fixed income. Also, we see it happening in the next few months to come.
So Bala, in terms of asset allocation, what do you do right now? Because, irrespective of the risk which comes with the small and mid-cap universe, the outperformance that they had in the run-up to 20K, and then since then, even now, the rebound that they are staging, case in point being what they did last week. Do you reduce your allocation to mid and small caps, increase to large caps, or vice versa?
I think it's an interesting trend. If you look at the Balance Advantage Fund, which is one of the fund which actually been focusing on allocation between equity, fixed income, and some bit on arbitrage as a category. At this point of time, given the fact that market trades around where they are highest level, at the same time, the current valuation does not justify being overweight on equity. That's why I think the Balance Advantage Fund, which we also manage, has got equity exposure of close to about 48%, and rest of it to bridge the gap between 65 and 48 is in the arbitrage, and the rest of them is actually the fixed income instruments, given the fact fixed income also carry a better risk, carry a better output from the investment point of view. I think that's the current view, and within that, our belief is it has to be a good mix of large and mid cap, though there's a wider feeling which is coming that mid cap and small cap stocks have run up. Therefore, are we running any kind of risk? We as a fund house have not taken that extreme call. And given the fact that breadth and the width in the market have been widening, the earning growth for some of these mid-sized companies have also been a bit better than the large cap names. So therefore, we still have a little good balance between large cap and mid cap. Even the Balance Advantage Fund has their portfolio, and that's the way the portfolio is constructed. But given the fact that where the market, where they are today, given the fact where the interest rates where they are moving, and the other potential risk that is could affect the market. And the equity in the case of Balance Advantage Fund, we are underweight at this point of time, close about 48 to 50%.
That's quite interesting you mentioned that, Bala. So should one increase allocation to fixed income versus equities? Clearly, is that the message?
Well, I think should be part of the consideration, given the fact that higher for longer itself gives an answer for somebody to look for a better carry. And 7.5% or 8% kind of carry cannot be ignored, even the any scheme of thinking. Therefore, while equity has to be built for longer term, we need to be clear about there will be some volatility which is set in as we move towards election period, as we still seeing our equity market continue to outperform, then we will go through a consolidation phase. So keeping that in mind, also keeping carry in mind, I think one has to look at equity from a longer term investing point of view through SIP and STP. At the same time, look at fixed income also as part of the allocations in the overall portfolio.
All right, Bala, thanks so much for taking time out and joining in, sharing with us your insights and outlook on the markets.